Returning to one of our top stories now, and Australia's economy is expected to slow significantly over the next 2 years. It could spell further peril for an already sluggish manufacturing sector. The industry is already being hampered by high costs and persistent supply challenges for both labour and materials. Joining us with more on the latest industrial trends survey is the Westpac senior economist Matthew Hassan. Matthew, appreciate your time, thank you. When we look at the economy more broadly, how important a factor is manufacturing in the mix of just how healthy or otherwise the outlook is?
Look, it's pretty important. I know it's gone are the days where manufacturing was a dominant part of the Australian economy, but it's still telling us a lot about some of the squeeze that's coming on to businesses and how they're struggling to deal with pressures at the moment. What we're seeing from our survey is activity is almost stalled flat in the second quarter, and while there's some hope of improvement in the quarter ahead, profitability is looking very soft, and there's a very clear cost price squeeze coming through the manufacturing sector with rising costs, and only a portion of manufacturers able to pass on those costs to prices. It's looking like a very difficult situation over the next year. The general mood around the general business outlook has soured. We now have a net negative 32% of manufacturers expecting conditions to deteriorate over the next 6 months. It's pointing to a very difficult mix that probably resembles a lot of what's going on across the wider Australian economy in this slow growth, high cost environment.
I mentioned supply issues. Has the sector broadly recovered from those experienced during the pandemic, or has that pipeline not really ever come back?
So it looks to have recovered to some extent. It's hard to disentangle some of the picture here, and what we're seeing is certainly cost pressures are becoming very prevalent. 67% of manufacturers reported rising input costs. Over half are seeing expect wage increases to be higher than a year ago. So there's certainly the cost element of these disruptions is still washing through the sector, and that looks to be the main issue. Just over 40% of manufacturers lifting their prices, but that implies that there's roughly a quarter that are facing a significant cost increase that are unable to adjust their prices. And I think that's the crux of the problem when it comes to profitability and wider conditions. You know, when we're seeing activity stalling flat and this cost squeeze still washing through the manufacturing sector. So the disruptions, certainly in terms of where we're seeing freight and distribution cost disruptions, those look to have largely unwound across the broader global economic backdrop. But for the manufacturing sector, there's still plenty of cost increases permeating through their businesses outside of that simple sort of freight and distribution issue, and it's looking to be, it looks like it's generating quite a squeeze on activity and profitability more generally.
And how severe are labour shortages?
Well, we've seen some easing. As I mentioned, over half of manufacturers are reporting that finding labour is becoming more difficult, but that's down from at the worst of the labour shortage issues in the September quarter last year. Over 65% were reporting labour is harder to come by. So we've seen some slight improvement, but that's still a pretty high starting point, over half. So while we haven't quite seen, while we've seen that improvement over the last 3 quarters, it's not back to a return to pre-COVID levels, if you like, and it's still clearly a pressing issue with the manufacturers also reporting, over half of them, that wage increases will be accelerating this year.
Speaking of pressing issues, what's your expectation when it comes to inflation and on the interest rate front?
Well, we expect the RBA going to move again in July and in August. I think what the survey is highlighting is that we're in a very difficult spot now with widespread cost increases, signs of a lift in wage inflation coming through. We saw in June the RBA board was particularly concerned about the risks that this posed to the medium-term inflation situation. I think over the last month we've probably had more signs that there's more to the story, particularly around wages. The strong May labour force result, over 76,000 jobs added, alongside what we've already seen from award decisions and wider changes around the labour market, will be underscoring those risks around wage-driven inflation over the year ahead, alongside already signs that expectations around particularly wages in the consumer space have also lifted. We think there's more to go from the RBA, unfortunately. We're clearly seeing signs of a slowdown happening in terms of demand, particularly in the consumer space, but at the moment the risks around inflation and an ongoing tight labour market are the central problems for the RBA, and we think they'll move a couple more times before they're comfortable around those risks.
Matthew Hassan from Westpac, I appreciate your analysis. Thank you.
Thank you.